Hello everybody. So this video is entitled Bitcoin Crash, the MicroStrategy FUD is back. And I have 4 facts that I want to talk about regarding a lot of the chatter on the internet about MSTR and how awful supposedly this company is. So let's go with fact number 1. Let's look at the past week. So this past week, Bitcoin during market hours was down 4.4% over the past 5 days, the past 5 TradFi trading days. STRD was down minus 6.1%. The correlation of roughly 1.5 held. Actually, the exact correlation of the past 5 days was 1.38. STRD did 38% worse than Bitcoin. That's a little better than 50% worse. It's actually good for us. This correlation actually is good for STRD. When that correlation gets lower, that means MNAV is going up. When it's lower to the downside, of course. So whatever hyperbole you may be reading on X about MSTR stock collapsing, that doesn't match the truth. In fact, MSTR stock is not collapsing. It's behaving very much like it should, which is about 1.5x Bitcoin. It's refined Bitcoin, as a sailor would say it. It's slightly more volatile than Bitcoin. So this is not a collapse. This is very much as expected. And of course, if STRD falls another 5% next week, we could expect MSTR to fall, 7.5 to 8% or 7 to 8% if Bitcoin falls another 5%. And if Bitcoin goes up 10%, we should expect STRD to go up 15-ish%. This is roughly how it works. So that's fact number 1. This is not a collapse. This is normal behavior. Fact number 2. MSTR will never do well if Bitcoin does not do well. If Bitcoin is going to zero, or if Bitcoin stays at $10,000 for like 4 years, then STRD will go bankrupt. This was always the case. This has always been told by Sailor. This is the bet that Sailor is making. MSTR can't do well if Bitcoin doesn't do well. If you don't believe in Bitcoin, you should not touch MSTR at all, and you should not touch any of the instruments of MSTR at all if you are not fully convinced by Bitcoin. And a lot of people, the price makes narrative. The price is, slightly down, slightly crashing right now. We're at 81.200. So Bitcoin is weak right now. Some people argue we're in a bear market. It sure feels like we're in a bear market. We didn't get the 150. We were all expecting that, but I always go back to the idea of not saying what you expect, right? Because Bitcoin will surprise you, right? And so the riskiest thing in the Bitcoin space is to try to put a prediction out, because he can't know where it's going. Anyways, it feels like a bear market. It feels like a bear market. The bear market is for studying. The bear market is for studying. And I want to say this: $81,000. Any reasonably tech-savvy, reasonably open-minded, reasonably growth-oriented investor who was active in, say, 2018, 2019, 2020 should have bought some Bitcoin under 10K. Like, maybe not a full Bitcoin if you were just starting out then. But if we're entirely honest, like 2019, 2020, 2018, Bitcoin was pretty much understood by a growing community then. And so Bitcoin has been on the scene pretty loudly ever since that period. Back then, the only turnoff, the only reason why someone would not get in back then is because of a technical hurdle, and people couldn't buy it in their brokerage. That was really the main hurdle. But if you were able to overcome the technicality of setting up a Bitcoin wallet, the odds are any reasonably tech-savvy right now is still sitting, tech-savvy person is still sitting on a 10x. That's roughly the odds. Now, if you started investing in the past 5 years, of course, you didn't get that chance, right? But maybe you bought it at 30 or 40K when it came down after the FTX collapse. The point I'm trying to make is that if you buy now, in 2030, 2032, when Bitcoin is 800K, you'll be also sitting on a 10x. And of course, that is not a prediction, but over the long run, if Bitcoin is not in the multi hundreds of thousands of dollars by 2030, yes, Bitcoin will not have been a good asset. But nothing indicates that right now. Nothing indicates that right now. We are still performing outstandingly compared to prior years. We are still showing the very high rate of returns that Bitcoin historically has had. The bear is for studying. I'll give you two books if you're just starting out, and that's why I use these books. I say 2018, 2020 is roughly when we knew. It's the Bitcoin Standard, of course, by Saifedean, April 2018. That's when that book was published. The #1 book in Bitcoin and cryptocurrency, right? #1 book. And then the block size wars. Pretty much Bitcoin became mainstream investable, if I may call it like that, after the end of the block size war, which was really early 2018, end of 2017, right? That's when it ended. So these are some reads. There's plenty of reads on Bitcoin. If you're worried about Bitcoin, know that the bear is for studying and actually growing your conviction in the asset. And anybody who reads extensively about Bitcoin typically will grow conviction, not the other way around. And fact number 3, let's go to fact number 3. No one can predict Bitcoin. Nobody in the short run. In the long run, we're all hoping Bitcoin will be in the millions. In the 2030s, we will have $1 million Bitcoin. Technically, we should. And over very, very long range predictions for Bitcoin, 5 years out, have typically worked out really, really well. But short-term, people who venture out to try to make a prediction 12 months from now, they have a very bad track record in general. So let me put this out there. I have no idea where Bitcoin is headed in the next 12 months. It could be headed to 70K or 60K. I have no idea. Most folks who were calling for year-end $150,000 Bitcoin were wrong. And what was wrong was not the price target. What was wrong was the timeline. Right? I personally believe we'll get to 150K Bitcoin. I don't know when. It could be 18 months from now. It could be 6 months from now. I have no idea when. But I fundamentally believe it, right? And I think we'll go higher. The problem is, why can't you predict short term? You can't predict short term because you can't predict things like surprise China tariffs. We know the quote-unquote bull market we were in was halted by a tweet which led enormous liquidations in the leveraged markets, in all of the decentralized exchanges, the Binance of the world, on 10/10, right? October 10. You can't predict a surprise tariff. You can't predict Greenland tweets, which is the reason why we fell back down to the low 80K, by the way, because we were sitting pretty at 95. And then a surprise tweet about Greenland kind of messes up the Bitcoin market again. So you can't predict any of this stuff. Of course, another hurdle, last government shutdown, so I guess that was 2 months ago. 2 months ago, another hurdle we had was banks having liquidity issues because turns out paychecks, like almost free paychecks, were about to be missed. And the banks, of course, run into liquidity issues if you don't get paychecks for millions of people where you don't get paychecks. So that could be another problem. Hopefully the government reopens on Monday. But they're technically shutting down this weekend. So anyways, we'll see about that. My bet on Bitcoin, my bet on MSTR is 2031 and beyond. 2031 and beyond. That is all I care about. That's why I don't do leverage and I don't do options. Or at least I shouldn't. I had a few options. I try very, very much to not do options. Very much so. Anyways, if you don't like short-term, if you like short-term stuff, for the mind who needs to be busy, right? Because sometimes the hardest thing is to do nothing. Sometimes it's very hard. So sometimes you need to fill your mind with what worries you. So if you like short-term stuff, you need to be very careful about who you follow. I'm not the short-term person to follow. You should never follow me for short-term. I don't know short-term. I don't do short-term. But if you want to follow someone, I recommend Marty Party. He's on X. And frankly, he's been pretty good. I've been following him for a while. He's been pretty good. He's saying that we are likely to hit something like 79,500 this weekend. 79,500. We're likely to hit that this weekend because that's where a lot of leveraged longs need need to be taken out. And so the market makers will drop the price of Bitcoin right to that line at 79,500, and then you could expect a sharp bounce back to liquidate the shorts. And you can see there's a bunch of shorts to liquidate right here, so that means we could expect a big drop to 79.5, and then, maybe a sharp bounce back to 88. And then the longs pile in again at 70, and then we go back down and go back up and go back down. So that's what he expects. I find that he's been extremely accurate in the past. But then again, short term, can he be accurate over the short term or the long run? I don't really know. The problem also is that drop, obviously, is going to happen on the weekend, so that us who are stuck in half in stocks, half in Bitcoin, half in stocks, most of us are in the stock world. Unfortunately, we can't get our cheap Bitcoin on brokerage rails because the best prices on Bitcoin always happen on the weekends. It's as if we can't have candy. Right? I would love for MSTR to be trading right now, this Saturday, or let's imagine we drop more in the afternoon this Saturday. I would love strategy to be trading because I would be heading. But of course not. Unfortunately, the bottoms are always hit on the weekend when most people who use brokerage rails can't buy. And lastly, I'll be careful about this. I won't say names, of course, but be careful of some influencers who tend to be super negative. Typically, engagement farming works this way. If you say something negative, if you say something fearful, you're gonna get way more clicks. If I make a tweet and I say, "Oh, Bitcoin is headed to 30,000, and there's nothing you can do about it. Bitcoin's going to 30,000," I'm gonna have 10x times more clicks, 10x times more follows. But if I make a tweet, "Oh, Bitcoin is coming to 79K, and then it's bouncing back to 88. Boring stuff if I say that, right? So you have a lot of influencers who have gathered millions of followers because they understood that tweeting the negative stuff, you tweet the negative stuff is how you get more people. So anyways, just keep that in mind. The nature of social media, unfortunately, trends negatively. It's all about negativity, because negativity is what draws the clicks. It's the same as news, kind of the same as traditional news. You gotta be negative to draw the eyeballs. So anyways, always keep that fact in mind. Fact number 4, and this is the last fact, and then I'll be done with this video. What is fact number 4? No margin call on MSTR. First of all, this is old, rehashed FUD from 2022, because in 2022, Saylor had taken a small loan against Bitcoin that he held, and he paid off that loan. That's a story that's done since 2022, but for somehow in the FUD it remains. In the FUD it remains that there's somehow a margin call. Somehow he would be leveraged, have pledged the Bitcoin and borrowed against the Bitcoin, as if Saylor was a degen on a decentralized exchange doing a 25x bet. This is absolutely not the case. The leverage of strategy is extremely conservative. In fact, the net leverage right now is about 10%. The debt, the convertible debt, is 8.2 billion, right? And the Bitcoin reserve is 57 billion. That's how much Bitcoin there is in reserve. And there's also some cash reserves as well for the dividend coverage. And we have about 8.3 billion of preferred, which gives a 29% amplification. Now, let's unpack that. Why is amplification entirely different than leverage? Because amplification means that the debt borrowed on the preferred never needs to be repaid. You never need to repay that debt. It's debt in perpetuity. It's perpetual debt. It never needs to be repaid. And for most of the instruments, except one, there's only one instrument where it's not the case, but for most of the instruments, if there were to be a crisis, Saylor reserves the right to skip the dividend either entirely or to skip it until the next payment period if we were to be in a glut for the price of Bitcoin for like a few months. So not only the pref in general, you can skip the dividend on these. Not only can you do that, but also the principal never comes due. That's why he calls it amplification. It's part of a capital structure. And perpetual debt used to be a thing 300 and 400 years ago, right? It's not really a thing anymore. Saylor, a student of history, brought it back, right? And then we have the traditional debt. which is 8.2 billion. But again, that 8.2 billion is not traditional debt. It is convertible debt. So whether you even want to look at this as actual debt, you see, for the most part, I don't want to look at this debt as actual debt, because that debt will equitize. It will equitize. That debt will be paid off with newly minted STRD common shares. It will be paid off via dilution. Right, so it's not to me. This is not the type of debt that can drive you into bankruptcy. Not to me. It's just simply not that type of debt. Lastly, let's conclude with well, first of all, STRD was built for the long run. That's what he tweeted today, this morning, as Bitcoin is crashing. Second of all, I want to talk about Stretch a little bit. The Stretch instrument is really working. If you had bought Stretch at $100, so when Bitcoin was trading at 93, 94K 2 weeks ago, Stretch was trading at 100. Stretch was working just fine. We moved from 100 to 99. We're at $99 now. So the volatility is super, super low on Stretch, right? That's why Saylor tweeted the day before yesterday. What did he tweet? He tweeted, delivers the first 11% BTC ARR with 85% of volatility engineered out. I think 85% is looking at since the history of the instrument. The volatility now on Stretch is much lower. My guess is that as we move forward and calculate the volatility, add a normal month, where in a normal month maybe this only gets decoupled, around the 15th of the month during the ex-dividend period. So maybe in a normal month, I think we will get stretched to 2% volatility, something like that. 2%, 1.5% volatility, and you get 11% of the BTC ARR. Because keep in mind, Stretch moved from 100 to 99 in a matter of 10 days. On the other hand, this is IBIT, right? Bitcoin moved from 95 to like 83, so it dropped 12%, 13% in the same period, in 10 days. So one of the assets is 13% drop, the other one is, a 1% drop roughly. So Stretch is working as far as I'm concerned. So hopefully these few points kind of remove the FUD that you may see online and kind of make you feel better about the stock. To me, this FUD, I'm so used to it. I've been in strategy for a very long time. I've covered it since the early days of the channel. So I've been in this stock for 3 years at least? Yeah, about 3 years. So there you go. Hopefully you like the video. This is not financial advice. This is not investment advice. This is only entertainment. I'm hoping you were entertained. Please subscribe. Please like. Follow me on Patreon. Follow me on X. Thank you for watching and have a wonderful, wonderful day.